viewers, this is your host and host Sunil Jhaveri, also known as Mr. Bond in the mutual fund industry, welcoming you back again on One-on-One with Mr. Bond, in conversation with Ritesh Pathak, Retail Head Sales and Executive Vice President of Motilal Oswal Mutual Fund. Today we are going to discuss about a very interesting topic which Motilal Oswal Mutual Fund have taken up as a campaign, underutilized topic, underutilized add-on feature which has been there in existence in the mutual fund industry since its inception almost, but never spoken about so openly the way the campaign of Motilal Oswal is being worked around. I want to invite Ritesh Pathak on the dais, please.
Hi, Sunil.
Hi, Ritesh. Yours is one of the fund houses who has taken up this as a campaign for popularizing a old add-on feature which has been there in the mutual fund industry. You're recoining it as FAB, fixed amount benefit, instead of systematic withdrawal plan. This is a underutilized and underrated add-on feature which not many people are aware of how to use it. You know, when I had done a tweet of SIP is underrated, SIP is overrated and SWP is underrated, a lot of questions were raised by the viewers on what is SWP. So thank you first of all from the mutual fund industry to popularize this as a theme now. But what I want to ask you is what prompted you? I believe that Mr. Ramdev Agarwal was the one who thought about this and asked your team to start popularizing it and running a campaign around it. So if you can give me some brief background as to how did this start?
First of all, Sunil, thank you so much for having this chat with you. So always a great pleasure in terms of interacting, discussing a lot of topics which are in the mutual benefit of all the partners, advisors of this industry. Absolutely true, Sunil. That's the fact. Actually, this whole idea was initially coined, or you can say was prompted through Mr. Agarwal. He himself or his family has used the systematic withdrawal plan to make sure the persons who will be needing this cash flow are getting it without any impact to their lifestyle. And that what also prompted us to come with this whole FAB idea. However, we wanted to ensure that we use a word which is very, very synonym with the fixed income depositors, which is fixed amount benefit.
Wow, I didn't know about that. The background to that fixed income versus fixed amount.
Yeah, so that's how we coined this name, the FAB, from where it comes at, because a lot of time still in our industry, while SIP has become a fantastic solution tool, however, we still see SWP has not been integrated so much by the investors or by...
So sorry to interject. Now, can you just explain to the viewers the difference between SIP and SWP? You know, we use this as a common jargon in the mutual fund industry, but many viewers may not be aware of what is the difference between SIP and what is the SWP and what does it stand for?
Sure, Sunil. So systematic investment plan, which we call it as SIP, basically means that you decide on a fixed amount which you want to invest on a very regular basis, let's say a fortnightly or a monthly or quarterly, and that investment goes on for numbers of years. So you accumulate the money over the number of years, and because of the magic of compounding, you are able to build a big wealth over a period of time. But what if the solution is not to create the wealth and you have a good amount of money with you, maybe through retirement or through some other benefit you've got that money. So solution to take care of the cash flow, monthly cash flow, is given by a systematic withdrawal plan where you choose a particular amount or percentage which you want on a monthly basis to be credited to your account on a fixed date. And every month you will keep getting this amount as a cash flow, monthly cash flow, quarterly cash flow, so that the requirement of the investors to meet their daily expenses are taken care of.
So it's just the opposite. So SIP is basically investing and accumulating wealth. SWP is basically withdrawing what you have invested as wealth and taking it as a cash flow on a monthly basis.
Absolutely, use the right word. So SIP is basically accumulation of wealth, And SW is basically the accumulation of your wealth in a way that you also keep on getting the money and your existing money keeps on going up. So that's
Absolutely.
the withdrawal plan is, yeah, Sunil. So, Sunil, I mean, this whole idea of, retirement is equal to financial freedom. Is it true? What do you think about it? Is it something which is what people perceive it is true or not in your way?
See, financial freedom can lead to retirement. It is your choice that once you're financially free, you want to pursue your hobbies, you want to go mountain, climbing, you want to play golf, you want to do horse riding, etc. But just by retiring does not mean that you are financially free. There are unfortunately certain age levels and age gaps at which you have to perforce retire in different organizations. So it can be 58 years of age, 60 years of age, and so on and so forth. But if you've not planned for your retirement, and if you've not saved and invested wisely during your 30 years of your professional life, what we call golden years, golden period rather, you will not be financially independent. So retirement does not necessarily mean financial independence, but financial independence can lead to your early retirement, or it's your choice as to whether you wish to continue work or not.
Right, absolutely true.
So Ritesh, Indians are the best savers when it comes to savings and investing habits. Almost 7.3% of the GDP was saved by the Indian investors in financial year 2022. But somehow or the other, it has dropped down to almost 4 to 5% thereafter. What does this trend showcase to you, and what are the red flags as far as the young investors are concerned with this saving habit which is dwindling and the saving to GDP ratio which is coming off?
Yeah, so it's very, very contradictory, Sunil. So because the per capita income is increasing, but the saving percentages have come down. So it's quite contradictory. But the fact is that what has happened, Sunil, is that people have become more aspirational. The lifestyle has become more aspirational. So if we see a youngster today, while he joins a job within 2 3 years, who wants to have Apple, watch, he wants to have an Apple phone, he wants to have the best of the cars, he wants to take a lot of EMIs, but happy to have that lifestyle. So that's one of the biggest change we have seen, over a period of time. People are become aspirational. They want to go on international vacations with their family. They want to have the, big cars or
Destination weddings are happening on EMIs now.
absolutely, yeah. That's a big change happening in the industry. People are. I know a friend who just bought a car. Ideally, he shouldn't have, but EMI give that flexibility to him to go for it. So the lifestyle choices have actually led to a big change in this, and also I would say the whole mounting expenses. For example, for your monthly expenses on a lower side, middle age household will manage in 50K, but let's say on the higher side it goes as much as 1.5 lakh per month.
Right.
Whether it is your Netflix of the world, it is your going out for a restaurant for a weekly, let's say, dinner, Sunil. So incidentally, if you go out in a metro city like Mumbai and Delhi for a casual dinner on a weekend, it will cost not less than 3 4 thousand for a family of 4 and 5 people.
On the lower side.
On the lower side, and if you go to fancy fine dine restaurant, it will be maybe 2x of it. So because
Correct.
of these rising monthly expenses, pounding expenses, plus the lifestyle choices, has led to the savings in, whole thing has been reduced. So that's where I see major change where it is,
So we are following the Western culture of buy now, pay later.
yes, it is kind of a US style. That's what we saw in the US, and that led to the growth of consumption in the US. And we are seeing the same trend in India. For example, look at the let's say people going to and buying jewelry, and some companies are getting benefited immensely because of that. So yes, the consumption and discretionary has actually.
I was astonished to see $1 trillion of credit card outstandings in the US markets.
Oh,
That was a number.
wow.
It's crazy number. Credit card outstanding in the US is $1 trillion.
Oh my God, that's humongous actually. Suni, but just I remember that when we were brainstorming the idea of the whole fab thing, we talked about accumulation phase and the accumulation phase of the FAB. And this idea not only restricting to the senior citizens, but also to the middle-aged people also. And I really wanted to, pick your brains on that. What made you think on those lines? How did you come up with that?
You only gave the answer to that question, the earlier one, the aspirational expenses which are mounting. So they are living from paycheck to paycheck every month. आपके पास जो salary का check आता है उसके पहले you've already spent that entire amount, unfortunately in various EMIs, etc. So that is the reason why a lot of these youngsters are leading a very stressful life. But the unfortunate part which they don't realize and we have not communicated to them is that they have created wealth from 25 years of age. Let's assume you are at the age of 45, 20 years आपने SIP किया है. So naturally you have created some kind of wealth for yourself. So why can't we use that wealth and mitigate some of the expenses? So why, when you already have wealth, why would you want to borrow more and more? So they are getting into a debt trap, unfortunately, not realizing that they have wealth on which they can depend on. And you have coined it very beautifully, income be wealth be. So आप एक wealth जो create किया है उसमें से SWP शुरू कर दीजिए, fixed amount benefit शुरू कर दीजिए. That's what we are calling a FAB. But do that amount which is say 6% per annum instead of if your underlying is growing at 12% per annum. So there will be income which will be created on a regular basis through that FAB amount. And there will be a wealth creation also which will continue to happen because the underlying is growing at 12%. So that's the reason why I thought that why not give this idea for the middle-aged investors also to think of dipping into their resources which they have only created during their lifetime and their working life period, and then give them a little less stress so that they can continue the journey more peacefully and enjoy their family lives also.
Right.
Now tell me, Ritesh, there are different types of investment income. We are all aware that there can be interest on fixed deposits or debt. There can be dividend from mutual fund industry, and there can be capital gains, etc. also. So these are investment income. So this is what you have saved. You have invested that money and then you create investment income. So your saving can be from your salary or your business income. You save that money, you invest that money through SIPs or whichever format. Why can't investors not only depend on investment income for their regular cash flow? Why are we talking about FAB right now or SWP just now as we are speaking?
So absolutely true, Sunil. So whether it's a salaried employee or it's a business income, now that money gets invested into a certain product, and from where you get a investment money, basically. Okay. Now, what we have seen over the years is that debt as an instrument, traditional instrument, we have seen the interest rates have actually come down drastically. I remember as around I was in 12th class, I remember that, my father did a FD for me where we were getting some 12-13%, annual return on that, interest on that. The interest rates have come down, and at the peak of it, today we are at 7.5% is what the rate we are today.
2 years back, it was 5%.
2 years was 5%. And going forward, interest rates will come down as the India will grow more. ये rate तो नीचे आने वाला है. That's a fact.
Absolutely.
Now, and the rates of taxation are also high, right?
Correct.
And एक unfortunately हमारे यहाँ एक चीज है कि लोग real rate of return नहीं देखते. People look at only on the absolute return and not the real rate of return. So they do not
Correct.
find the inflation and the taxes. So
absolutely.
So if you look at the debt returns, I mean interest, and if you minus the inflation and the interest, there could be a possibility that your capital is not growing but eroding to an extent, right? If you look at the dividends, another way of getting some flows. So dividend income, while people believe it is consistent, actually it is not. And dividend income AMCs can only pay if they have a surplus. So there is no
and realized gains, basically. Only when you have realized gains.
Absolutely. So if the scheme does not have a realized gains, there is no assurity of the dividend to be paid every month, or that to the extent of amount the investor is looking to manage the monthly lifestyle. So again,
Correct.
that may not solve the purpose of managing cash flow as you put in. And third is the capital gain. Again, capital gain arises when the markets are in the bull run, markets are doing very well. If the markets are not doing well, there is no capital gain. Absolutely. So you're not making any money out of it. So in all the three scenarios, you cannot depend on it for managing the cash flow. And that is
Absolutely.
where I believe that in the past, a lot of investors have made a mistake of investing in these instruments as a monthly source of cash flow, and the experience actually have not been honestly been that great. And when I was thinking of that, Sunil, I also remember that you know uh, when you recommend fab to a client which is slightly more, I will say, middle aged clients. Okay, the question is comes to everybody is that will it not eat in their future wealth, right? So I really want to get your perspective on that, because that is something I'm sure everybody will be benefited by your explanation on that.
No, no. So, the simple answer to that is your tagline: Fab, income be, wealth be, as I've just mentioned earlier also. So basically what you're doing is, let's assume you have created a corpus of 1 crore of rupees by the age of say 40, 45, whatever is your age group, on which we are recommending fab at say 6% to start with. And I'm
Right.
assuming that the underlying is either in the balance advantage fund category, hybrid category, or equity category, which will definitely earn you 10 to 12% returns on an ongoing basis. There will be years when there will be no returns. So average की बात कर रहे हैं हम तो. So sometimes in some years you may dip into your principal, but on an average, if you are only withdrawing 6% per annum, and to give you a simple example, on 100 lakh rupees, 6% per annum will be 50,000 rupees per month, which is 6 lakh rupees per annum. And underlying will still grow at 12%, assuming you are in equity as an asset class. So there is income which you are creating through 6% as a regular cash flow, and there is a growth also which is happening, wealth also which is accumulating because of that 6% additional. So when your corpus grows from say 1 crore to 2 crores to 3 crores to 5 crores, and your amount which you require is maybe 1,25,000 or 1 lakh per month, on 500 lakhs you are only withdrawing 2.4% of your 5 crore rupees to generate that 12 lakh rupees per annum.
Correct.
And underlying is, mind you, growing at 10 to 12%. So that difference of 8 to 12%, 10%, where is it going to go? It will be accumulating in your own corpus only, right? So that's the reason why I'm suggesting that for the middle-aged investors also, those who wish to manage their cash flows, they are burdened with a lot of debt and EMIs. The easiest way is that you start your SWP on the corpus which you have created at 6% to start with, assuming underlying growth continues at 12%, and you will have both income also as well as wealth. So there is absolutely no tensions to be kept that I'm eating into my future wealth, but you will definitely have your comfort of generating regular cash flow now, at the same time grow your future wealth also.
No, you're absolutely correct, because we also did some, back-ended analysis, and we realized that, Sunil, that, so for example, we have, like mid-cap funds and other funds in our AMC. We realized that
Which have done phenomenally well, by the way.
somebody would have done a FAB plan in 2014.
When you launched your mid-cap, right?
Correct, sir.
Yeah.
And that would have been, and took a deferred withdrawal after 1 year. Till today, the person would have withdrawn close to on a 1 crore rupee, let's say 8% withdrawal, and just for explanation purpose,
Wow.
would have withdrawn close to 60 lakhs as on today.
From 2014 to 2023.
23, 2 months. I mean, 2 months back is what number I got into, and today value of that investment would be around 2 crore.
Wow.
So it is income be just your 60 lakh rupee, which is monthly, 8 lakh rupee, which is yearly, sorry, getting added to you, plus the 1 crore being added over, which is wealth be. So
Correct.
what you just mentioned, I just tried to portray actual example of the same happening.
What are the benefits of FAB? Let's just enumerate those for the benefit of the viewers.
So if you ask me, I think there are numerous benefits. First of all, Sunil, आपका monthly cash flow problem solve हो जाता है. So
absolutely,
you are not dependent on, let's say, anybody else. You're not dependent on maybe on markets, etc. You know that you are going to get a fixed amount of money every month, maybe whatever date you are choosing.
That
For
becomes your second source of income.
सेकंड सोर्स ऑफ इनकम आपका, एक पैसिव इनकम आपका अलग से बन गया ये. दूसरा
Absolutely.
बनना होता है इसमें, विच इज आई बिलीव सुनील इज पीपल अंडर एस्टिमेट, इज द टैक्स एफिशिएंसी.
Correct.
So if you take a hybrid balance advantage or equity product, the taxation is very superior as of now. Basically mean that your net in-hand returns tax post-tax are very, very attractive. So that's the second part. I will believe that इस प्रोडक्ट को और बेहतर बना देता है. And third is that in terms of the aim of any investment is to beat the inflation rate. Right? Now, any investment should also work in such a way that it should beat the inflation rate. So आपके लिए hybrid or equity product does that. But the systematic withdrawal plan with a step up, right, also ensures that over a period of time you stepping up a SWP and you are beating the inflation and maintaining the lifestyle.
Correct.
जो आपका लाइफस्टाइल आज है, आप उस 10 साल 20 सेम लाइफस्टाइल आप अच्छे से जी सकते हो. फोर्थ पॉइंट जो हमने जस्ट अभी बात किया, it creates wealth for you and not only for you, for the next generation, which can be passed on later on.
Unfortunately, financial assets are not looked upon as multi-generation assets.
Absolutely, absolutely. That is something which is unique, because end of the day, your wealth will, CAGR is the eighth wonder of the world. It will keep compounding. Okay, so it has to go somewhere. So who better than your loved ones taking the benefit out of it after maybe when, God forbidden, if you're not there. So that's another very fantastic, I would say, benefit of the FAB plan. It also helps you to manage your expenses very well. Okay, because you understand how much you're going to get every month and how to going to manage your expenses. So that's another benefit which I will see on this. Plus, it can be also used as a deferred annuity for the retirement. Okay.
Absolutely.
So today, okay.
What is, if you can just talk about a little bit on what is deferred annuity?
So, today I don't need the money. I am doing well. I am earning my income. However, maybe after 10 years after, I need income every month to take care of my lifestyle and all my financial needs.
Correct.
I'll plan it today in such a way that after 10 years, I am able to withdraw my monthly income.
So for the next 10 years, you go into the growth option, you don't withdraw any amount of money, and
Correct.
Only after 10 years, the underlying has grown, there is a huge cushion built in, and then you start withdrawing. So that's what we call deferred annuity.
Yes. So I'll start withdrawing after 10 years. Once I need those monthly expenses to be taken care of, I don't have a earning. So as long as earning, I'm not going to withdraw. I will defer my withdrawals only when I have a financial need of managing my monthly cash flow, then only I'll start it. So in a very simple word, you put it, that, you start and you actually need the money, you let your money grow through a growth option for 10, 15, 20 years. This is your requirement. So that's deferred annuity for you.
So Ritesh, before we go ahead, let me ask you this question. You mentioned that, it's very tax efficient.
Right.
Right? If you can just explain to the viewers, how is it tax efficient? So let's assume that we had a bank deposit of say 12%, earning 12%. Right. So on a 10 lakh rupees or a 1 crore rupee, you will earn 12 lakh rupees. And let's assume that you are at the highest tax bracket of 30%. You'll end up paying 3,60,000 on that 12 lakh rupees as tax.
Correct.
Right? How is this beneficial? Let's assume the same amount of 1 lakh per month is what we are withdrawing from an investment of 1 crore through your FAB, assuming 12%. I mean, it's just a calculation. We are talking about 6%, but let's assume it is 12% or on a 2 crore rupees, 6%, whichever ways you want to calculate. How is it tax efficient?
So, Sunil, I mean, like you said, in a fixed deposit. So if you are doing, let's say, 1 crore of investment, like you said, you end up paying 30% tax on the total income interest which you received, right? That's the current rate of the taxation on that. However, in the FAB plan, since you are choosing the hybrid or equity product as the from which you are going to withdraw your monthly cash flow, what happens that first of all, the first lakh rupee every year, as per the rule, long-term capital gain, it is basically tax-free. You don't have to pay a tax on that.
Right.
So, okay, the first lakh of rupee on your monthly withdrawals will be tax-free. And what happens that here, your the once you start invested, your units are getting withdrawn on a monthly basis. Okay, any week is fluctuating up and down. So basically, your some units are withdrawn from your cost, some units are withdrawn from your capital gain. End of the year, you calculate you're paying a total capital gain on a tax rate of 15% on a short-term capital and 10% on long-term. Since most of us would be doing the withdrawal after 1 year, there is no short-term capital gain, only long-term capital gain. So 10% withdrawal, which is very significant lower than a traditional instrument like a fixed deposit, plus a cushion of 1 lakh of capital gain, which is tax-free for the investor. So the pre-tax return, if you add both of that, it'd be almost significantly lower than what you actually get in a fixed deposit.
So just for the benefit of the viewers, that 10,000 per month which you are withdrawing as SWP, that entire amount is not taxable.
No,
It is the redemption of 10,000 worth of units which you will do. So let's assume 10 rupee has grown to 10 rupees and 10 paisa. So 10,000 divided by 10 rupees and 10 paisa, the number of units you will withdraw is 990 units,
right,
on which the short-term gains tax will, the capital gains, short-term capital gains will be only 99 rupees, on which you will end up paying 15% tax, which will be only 15 rupees.
correct.
So that's the way I think the calculation goes, right?
Yeah, so because in our mutual funds, you are only paying taxes on the basically NAV difference, not on the
NAV difference and the
withdrawal.
number of units which you have withdrawn.
Correct, not on the absolute withdrawal.
Because the viewers are under the impression that 10,000 rupees is their income. That 10,000 rupees is not their income.
Correct.
The
10,000
monthly
the
withdrawal.
income is only to the extent of your number of units withdrawn, at what rate they bought, and what rate today
Exactly.
the withdrawal are happening.
Yeah,
Only
we will show up
difference.
this chart, on the screen for the viewers
Right.
to understand. So naturally, they will have a better clarity on this. But yes, sure.
Like Sunil, you said, it is only out of the 10,000 rupees, it is only the 99 rupees.
Which is the short-term gains tax.
Yes, you're paying that. So it is very, very low in the hands of the investor. And that's why it's a fantastic option for an investor on a post-tax basis.
Correct.
So, I mean, just think on those lines only, Sunil, while we're talking about that's a great option. However, we have seen a lot of investors not been very keen on taking equity as a, systematic withdrawal or a FAB option. Okay. I have always seen you advocating the use of, this hybrid and equity, even for the, for all the kind of investors, even the, people getting close to retirement also. What prompted you to start, suggesting on those lines? And did some analysis? How did you come with that?
Sure. Sis, let's talk about the senior citizen category, which is the richest investor class, because उनके पास PPF है, retirement corpus है, सब कुछ है.
Correct.
But once they become senior citizen, then we say, sir, now you cannot have equity as an exposure because you're a senior citizen. You'll have to get into debt. And you yourself have said that, debt cannot beat inflation also. So if you take post-tax, post-inflation kind of returns, it's negative real return. So naturally, if the senior citizens have to survive and sustain their 30 years of their golden years, so if we understand rule of 30-30, it is 30 years of your golden period, which is your working life, and 30 years of your golden years, which is your retirement life. If 30 years of your golden period equity could deliver returns for you, then what stops you from investing in equity as an asset class in your golden years? 30 साल तो वही है ना, equity market भी वही है. मैं youngster को बोल रहा हूँ, आप you climb the ladder of wealth creation. We are asking the senior citizen to go down the wealth erosion path. So that prompted me to think that what is the senior citizen actually gaining by not taking any risk in the equity as an asset class? 1 crore at the age of 60, if they invest in a debt as an instrument, at the age of 85, after 25 years, at 6% inflation adjusted, it is worth only 23 lakhs in purchasing power. So what risk have they not taken, and why did they not take that risk? So for senior citizens, I started toying with the idea of infusion of flavors of equity, not 100% equity, because they cannot tolerate that, or the volatility attached to it. 60% नीचे आ जाएगा, गया तो बेचारे जाएंगे कहाँ? So Balanced Advantage Fund category is the one which I had toyed with, and I saw the idea that on a 3-year and a 5-year basis, BAF has not delivered negative returns. Naturally, if that be the case, then the senior citizen, once they start withdrawing 6%, 8%, 9%, depending on their requirement and the cushion which they create, what do senior citizens want? Let's understand that question. They want regular cash flow that can happen through your interest on debt instrument, or it can happen through SWP as we are discussing, or FAB through a Balanced Advantage Fund category. They want emergency cash जो आपको जरूरत है तो फिक्स डिपॉजिट भी आप ब्रेक करोगे, इमरजेंसी है तो आपको रिडम्पशन भी मिल सकती है through the mutual fund route. I want to leave something behind for the kids. What are you leaving behind for the kids? At the age of 85, you're leaving 23 lakh worth of purchasing power for your kids. It's neither here nor there.
Yeah, absolutely.
And finally, what happens is, that's the reason why I toyed with this idea. I did some back-tested analysis. To just give you an example, in 2010, if you had invested 1 crore in a BAF kind of an instrument or a product, and you had withdrawn 6 to 8% per annum, the current value of that BAF is still 1.7 crores. So income be, wealth be for senior citizens also. Senior citizens have to manage their cash flow, because the number of years of their golden years is increasing. It's not decreasing, because many people want to take sabbatical at the age of 45, 50. So your unproductive years have become more than the productive years where you were actually earning income. So they have to depend on passive income. Then passive income through a BAF kind of a product, infusion of flavors of equity, is what the idea was. That was the entire thought process.
No, absolutely makes sense. And Sunil, I just remember a tagline, there is a risk in not taking the risk also.
Absolutely.
Right? So basically, for a senior investor, I mean, there is no as such rule that you cannot invest in hybrid or equity, as long as you have that risk appetite and there is the path to that whole investment. So
no, irrespective of that, finally what happens is senior citizens think, I want to leave this behind for my kids, right? I want to protect the principal. Why do they want to protect principal? 1 crore rupees, let's assume whenever they pass away, is worth 90 lakh rupees, for example, because they've eaten into the principal. Their beneficiaries have another 25, 30, 40 years to take that journey forward. Senior citizens don't think of mutual funds and the financial assets as multi-generation. The way they think of the real estate and the jewelry as multi-generation, their mindset has to be changed to say that this is also multi-generation. It is not only your generation product or your generation asset. So once they start rethinking on those lines, they will start taking that infusion of flavors of equity a little more seriously.
No, absolutely true, Sunil, because I think when you say that when you invest into a fixed deposit, you are only looking at getting the interest which is over and above your investment amount. Your
Correct.
idea is not to make sure, that your capital grow. And that is where I believe the mutual funds through the, hybrids, BAF and other equity products give you both the flavors of income be and wealth be. So you're not only taking care of yourself during the, last retirement years of your life, but enjoying the fruits of investment through the wealth, as well as your, making sure to the loved ones. So absolutely सब कुछ हो जाता है. पर एक सवाल इसमें बहुत बार सुनने को मिलता है, सुनील, is that, lot of times we have seen even professional guys, they go through a bad time, their incomes doesn't start flowing the way they want. Even retired people at times have not saved too much during the retirement period, and they face lot of issue in managing the cash flow. And these are very stressful times for any individual if they have financials are not in place. should they tackle such a situation in your view? Since you have been advising since long, it'd be great to hear from your perspective on that.
Absolutely. This COVID was a big learning curve for all of us. एक तो इनकम भी हमारी बंद हो गई थी, lot of people, business losses happened, lot of medical issues happened, and so on and so forth. So such times comes into anybody's life, any investor's life on an ongoing basis, and that's the time when they are absolutely at a loss as to मैं जाऊं तो कहाँ जाऊं. They lose total hope. But these are the times when we need to guide them on the right path. Most of the investors, Indian investors, I would say and presume, at least have one primary home, which they can say is their own investment. But the unfortunate part, as mutual fund distribution community, as mutual fund industry, we have told them, sir, primary homes are untouchable. You should not touch that at all. But these are the dire straits and dire times when they may have to touch that principle, the primary homes, and monetize that. The best part about Indian context is that rental yields are only 2 to 3%. So if my primary home is worth, say, 2 crore rupees, if I had to, or let's take an example, 1 crore rupee, and if I had to rent a similar property, it will be costing me only 2 lakh rupees per annum. Rental yield jo bolte hai is only 2 lakh rupees per annum. So if I sell my house, primary home of 1 crore rupee, invest that amount, let's assume earning me 10% return, that gives me 10 lakh rupees per annum. I pay 2 lakh rupees per annum in rent. I have another 8 lakh rupees additional flow, which can grow, and plus underlying will still grow, right? Because as we said, income be, wealth be, if you do a SWP of only 6%, pay 2% of that as rent, and the balance will still grow at another 6% or so and so forth. So naturally, this idea has not been given to any person who faces such stress during their lifetime. It can be senior citizens who have not saved and invested enough. It can be a middle-aged person who has lost his income earning capacity, or whichever ways you want to call it. These are the times when they may wish to look at monetizing their own primary homes also. And most of the primary homes in the metros are in multiple crores. And rental yields across India is something similar, 2 to 3%, at max maybe 4%.
Yeah, that's very
that also is stretching it a little bit. But so what I'm trying to say is that please, as mutual fund industry, as mutual fund distribution community, give this idea to your investors who are stressed right now. They have no hopes in life, but tell them there is a silver lining to their entire issue, which is their own primary homes, which they can monetize, save that money, invest that money, generate cash flows, and then take their journey forward. Otherwise, it can be very fatal also for some of these investors.
So Sunil, I have one more, one thought came to my mind is that, if we see today the SIP out of the total equity corpus, hybrid equity corpus, SIP AU would be close to what, 7.5, 8 lakh crore in terms of the overall size. However, if we look at the systematic withdrawal plan or a FAB option, cash flow option given to a client is very, very low numbers.
Minuscule,
right? Do you really see that as an industry, as a lot of partners, advisors can take this up as an opportunity to serve client better? Because solutions are two sides. One is that, like we discussed initially, one solution is when you accumulating money, and one solution when you deaccumulating money. This whole FAB, this whole systematic withdrawal solution can be made 5x, 10x of what it is today. And there's a sheer opportunity in front of everybody through this solution. I think, and Misters will be great beneficiary, and so will be partners. Maybe your thoughts on that?
No, absolutely. Ritesh, why do investors save and invest? You are also an investor, I am also an investor. Finally, you save and invest so that you create a second source of income, either during your own professional life or in your retirement life, whichever ways you want to call it. But in your professional life period, if you are stressed with too much and burdened with too much of your debt because of EMIs, etc., but I already have created wealth, why cannot not depend on my own wealth and do SWP or FAB? Now, as a MFD, it is my duty not only to guide the investors on only accumulation, but finally they want a solution on how to do distribution of that wealth either during my professional life or during my retirement life. Either ways, I must guide, as an MFD, I must guide my investors, because investors are looking at solutions on how do I utilize my own money. आज तक किसी ने उसको बोला नहीं है. They have been told that आप जब भी रिटायर होएंगे, that is the time when you should be looking at distribution of your wealth. Why should I wait for that?
आज से प्लान करना चाहिए. Absolutely.
Absolutely. पहले से प्लान करो. This is a great opportunity as advisory community to go out, reach out to all your investors. My suggestion to them is do a survey of what their expenses are on different heads. How are they meeting? Is the income of theirs enough or not? I would recommend that Motilal Oswal Mutual Fund, if they can create a survey sheet and then circulate that to the MFD community, and let that MFD community in turn give it to their investors, then they will realize that whether it is possible for them, because they are aware of, once they will be aware of the expenses of the investors, they already know what is the investments of their investors. So if they try to match that and give a solution to the investors, they'll do a great service, according to me. So I would request Motilal Oswal to create a survey sheet which can be circulated to all the investors.
Absolutely.
Thank you, Ritesh. It was wonderful talking to you, and a very interesting and important topic, very dear to my heart, and that's the reason why I thought we must chat up, because you are one of those who are actually campaigning for FAB, fixed amount benefit, SWP, underrated, underutilized concept. Hopefully, as you said, if we can become 5x or 10x or 100x also, we will still be better off.
No, Sunil, absolutely. Pleasure is all mine. It's always great to chat up with you, especially on solution side. And we at Motilal, I think we have been focusing now on the solutions to on the investor side, which can absolutely help everyone. And thank you for having me on this show today. Great. Thank you so much.
Thank you, everyone. We'll see you on the other side on one more episode of One-on-One with Mr. Bond, in conversation with another guest. Thank you.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.